Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? Y'all, I had to change locations today. I was feeling a little grumpy this morning, but now I'm feeling a little bit better. I think it's been a lot this week. I was off Thursday to Monday traveling in the van. And then I came back home, had just a crap load of meetings and, staying on top of the shows and making sure content is always going out because, hey, it's just a one-man show over here, let me tell you. But I do have to shout out, I got my video editor. Jamie is a huge blessing, Matthew, and even shout out Maurice, my social media manager. I had to move locations. I think why I'm a little grumpy is because, in my condo, I live on the top floor. And by the way, how I bought this condo is actually I used my policy money for the down payment and closing costs and all of that stuff. And then actually I took a loan from the bank of dad, aka his policies. And now I'm paying him back and he's charging me interest. I bought the condo in November of 2023. We're now here in March of 2026 at the time of this recording. And I said, Dad, I've been making these payments to you. You're charging me 13% interest rate, which is, by the way, the family discount rate. And Dad, would you negotiate with me? Can we drop my interest? Can we say 10%? Daddy, can I pay you 10%? So actually he did work with me. It's been great. So, but I do, I have that mortgage with Dad, and obviously, Dad filed the note with Volusia County. So hey, if I don't pay it back, he's going to come and foreclose on me just like any other traditional bank or lender would. But why I'm bringing that up is because they're doing work on the roof right now. It's been going on for 2-3 months now, and they're putting a whole new roof on, and it's just jackhammers and up there. And man, I posted a story just today on my Instagram account. By the way, go follow my channels, Hannah_Kessler. And you can hear it so clear. And I was like, this is going to come through the mic and this is not going to be great audio quality. I need to go move locations. So I was like, you know what? Why don't I just put on my swimsuit and let's go to the beach? Let's go do this recording at the beach. And I think this is a perfect scenario for this to play out, specifically for the topic that I want to talk about today. What happens if my life changes after I commit to becoming my own banker? I am going to get into a lot of the downfalls that we have in life. Okay, we'll get into that conversation. But honestly, I always want to encourage y'all to be positive. It's all about your mindset. What Earl Nightingale says is that your mind is a garden and you need to tend to that garden and you need to respect it, love it. You need to feel the emotions. And I always just encourage y'all to always look at life as the cup is half full rather than half empty. But we will get into the half empty topic here today. But my first thought is, oh my gosh, what happens if my life changes after I commit to becoming my own banker? Hello, living beachside. I can go to the beach at 11:23 on a Friday and just chill, because I manage my own time. My calendar isn't dictating my time. My money isn't dictating how I spend my time, where I'm spending it at, or even whom I'm spending it with. Speaking of ADD right now, I should totally bring Momo and Daisy to the beach. I think they would love that. I've never done it before. Daisy walks on a leash. She's so cool. Momo, we haven't totally gotten her leash trained yet, but I have this little cat stroller. I'm that person. I'm that crazy cat lady. I put her in the stroller and I just take her on walks while I'm walking Daisy. But this is what happens. It's freedom. It's to have control. It's to have liberty over your money, your lifestyle, and just truly your time. In my opinion, right, money is just a means of exchange. It's nothing more than a tool and a resource. And if I can master the money game so that I can come to the beach, I can dip out of town in my van, go on a camping trip with my girlfriend for the weekend, that's truly the life that we're all craving and chasing after. You know what I mean? So Anyways, feeling very blessed today. So I just want to say, I guess I just kind of want to start off with like gratitude too. I'm very grateful for this DJI camera, very low equipment. I have my mic right here. This camera is like literally, what was that? Maybe a foot tall, if that. And it's called the Osmo Pocket DJI. I think I have the Osmo Pocket 3, and it's part of the DJI cameras, and it's amazing. It's amazing when I travel. Then I don't have to like look around like the big mic stand and my other task cam recorder and all of that stuff. So a lot of y'all are probably thinking, what if I commit to this and my life changes? You know, when I'm talking with a lot of my clients, a big conversation that comes up is, well, what if something happens? What if I do have these downfalls? I can't pay my premium. And it is, at the end of the day, it's almost like a marriage, okay? Like you're walking into this lifelong commitment to yourself to pay these premiums inside of your policy. And a lot of people, as we know, like even marriages, grooms, brides, they'll get cold feet. Literally day of wedding, they'll call it off. They won't walk down that aisle because they get the cold feet and they're like, oh shit, this is what I'm about to do. I'm about to get into a whole new chapter of my life. And it's similar to the infinite banking concept. And people will get cold feet. Literally, I've had people straight up just ghost me. But you just ghost me. You guys are all so gung-ho on the beginning. You guys want to do this. We walk through strategies. We talk through illustrations. We go through all of the questions. I give you all of my feedback. If I was in your shoes, this is what I'd be doing with my money and incorporating the policy into my financial life. But then for whatever reason, y'all get cold feet, and that's maybe why you ghost me. Or you start talking to your family members, you start hearing all the noise that's out there, and then you think, oh my, you don't have your own self-confidence or to even like think for yourself, and you're like, okay, I shouldn't be doing this. Here's my biggest advice on that. If you're taking a financial advice from somebody, the number one question to ask them before you really get into it is either A, what is your net worth, or B, are you a millionaire? And if it's no to both of those, and they're trying to give you financial opinions, financial advice, if you will, I put that in quotes for all my audio listeners. Why are you listening to your broke ass brother-in-law? I mean, seriously, I have a family member. I'm going to share this next week, actually, on the live stream. Well, actually, this story will already be shared by the time this recording comes out, because hello, April. I love April. Look at my April nails, by the way. So Easter egg, right? But I have a family member that literally got a policy back in 2017, and it was with a great company, Security Mutual Life. They're a great company. It's one of the 6 companies that we personally do business with here at the Money Multiplier. And she surrendered, or she either surrendered or just let that policy lapse. I don't really totally recall, but she surrendered the policy because her dad said, what are you doing? That stuff is a scam. You shouldn't be putting your money there. Well, now, in January of this year, January 2026, so literally 9 years later, she's coming back and she's like, okay, I should have never listened to my dad. I can't believe I just let him dictate my thoughts and my control over the money, and I need to start doing this again. So she is going through the underwriting process. We're helping her start that policy again, because y'all, time is going to pass anyways. Would you rather start this 9 years later, or would you rather have a 9-year-old efficient policy? Because time is the only resource we can't get back. Time's going to pass whether you like it or not. That's really the universal law, right, of time. And now she has health concerns. She has this hysterectomy coming up on April 6th, and the insurance companies won't approve her right now until that surgery is done. So like, my mentor, I get so many one-liners from my father and my mentor that just like really, really stick with me. And he says, you got to get what you can get while you can get it, because nothing's going to last. Even like, y'all know that I love my music festivals, my live bands and music and stuff, and dancing in the middle of the woods with all my hippie friends. And it's even like there's this one band where they took a hiatus. I remember like seeing them all the time living in Kansas City, and then they took like a 6-7 year hiatus, and then now they're back. They're playing this festival down here in Florida at a festival called Resonate over in Suwannee. If y'all don't know Suwannee Music Park, that has even inspired me. I was like, I would love to own land, put some power, sewage, water there for my RVs, have like a big old campground, and then even have like an amphitheater, big fields, and like we could host our own music festivals. And like, you know, now you're paying me, I'm the venue, now you're paying me to come and host your events there, or maybe I host my own events, who knows. But Suwannee really made me feel the passion for like when an establishment is ran so great by good people, you know, it's such good vibes every time I go there. There's something just magical. That's why they call it the spirit of Suwannee. There's like, it's just, you know, something magical is happening there, for lack of better words. So the real fears that y'all are probably feeling when you first start with your infinite banking journey and becoming your own banker is you're afraid that income's going to drop. You're afraid that your job is going to change. You may be fearful about starting a business, having kids, getting married, and unexpected expenses. And the real question isn't what if life changes, it's what system works because my life changes. You know, like, not to like totally harp on it, and actually we're going to get into this, but like, y'all know my opinions on 401ks, IRAs, Roths, qualified accounts, even sometimes like brokerage accounts. But I want to have access to my money. I want to use my money for what I want, whenever I want. And I don't want somebody else or another institution to tell me, yes, you can do this, or no, you cannot do this. Because again, the number one fact of the infinite banking concept is total ultimate control. Let's talk about that for a second. Total ultimate control. What do you mean by that, Hannah? Well, in your policy contract, you being the policy owner, it states in there, it's written in there, don't just take my flapping gums for it, go and read your policy contract itself. But it states that you, the policy owner, you hold first rights to any cash value that's inside of your policy. So that's why when you call up the insurance company, you say, hey, I want to take out my cash value in the form of this loan, because hey, you can take out policy loans or you can withdraw the money from the policy. I don't recommend withdrawing it, but we can get into that topic at another time. But if, hey, insurance company, I want to take out this cash value loan from my policy. You know what they say? They ask you, okay, how much do you want? Or do you want the maximum that's available? And question number 2, would you like this directly deposited into a bank account, or would you like us to send you a paper check? And that's the only 2 questions that they will ask you. They never ask you what you're using the money for, when you're going to be paying it back, or how you're going to be paying it back. Because at the end of the day, they do not care. Cash value in your policy is nothing more than a prepayment of your death benefit. They're already promising your beneficiary that death benefit money anyways. So all we're doing is we're tapping into the living benefits of the policy and using the cash value, the equity, if you will, just like the equity in your house, it's the equity of the contract of the death benefit. We're just tapping into that equity, that cash value early now to go and finance and buy the things we're already going to go buy in life. You were already going to go buy yourself new tires for your truck. You were already going to have to spend money on taxes or legal, or you were already going to have to go spend money at the grocery store, or the water bill, the phone bill, your kids' daycare bill, right? You're already going to have to go spend that money anyways. So why don't you just run the money through the policy first, have it flow through there? hello truck, have the money flow through the policy there, and then take out the cash value to go buy the thing you were already going to go buy. Because, and I know that y'all get this, but let me just say it for maybe my new listeners here. When I flow the money through the policy first, now my dollar is continuing to grow and compound uninterrupted guaranteed interest. I get a guaranteed interest inside of my policy. Again, that's written inside of your policy contract. It's a guaranteed interest we receive. And the only thing that's not guaranteed are the dividends. Dividends, I can't sit here and promise you dividends because in the contract, dividends are not guaranteed, but with the 6 companies I do business with, again, they've been paying out dividends for over 126 plus consecutive years. Some of these companies have been paying out the dividends for over 140 consecutive years. So is it a strong chance that they'll keep paying out the dividend? Yeah. And that's the only thing that can fluctuate, because high interest rate environments, dividends will be higher. Low interest rate environments, where we've been at for a long, long time, now the market's kind of evening out. And I haven't checked on this yet. I know the Fed chair, is it still Jerome Powell? I think it's still Jerome Powell that's sitting at the Fed chair. But he was supposed to adjust the Fed interest rate. I don't think that happened yet. I saw, that was like a week ago where I saw that headline. Because my father actually like pays for cable and like actually watches the news. I don't watch the news. Sorry, fake news. I get my news from Instagram. I don't know. Can you believe anything you see on the internet anyways? So I know that times it's never going to feel like the most perfect time to start this journey. Like some of y'all are waiting for like the stars to align, the weather to be perfect, and everything is just, all the ducks are going to be in a row. Let me ask you this question. When was the best time to start your business? My dad opened his first chiropractic office in 2008. 2008 is when he opened that first chiropractic office. Remember what was going on back then during the housing bubble? When was the best time that you had your first child? When was the best time that you adopted that new puppy or kitty? If you continue to sit on the sidelines, you're just going to keep furthering this journey for yourself. You know, like I even like just yesterday, I was talking to this one guy. He hasn't taken a vacation in 6 years. 6 years he has not taken a vacation because he's been grinding. Oh my gosh, I'm just so into this and my business right now. And it's just like, I do not want to wake up when I'm even 55 years old, 65, 75, 85 years old, looking back on my life, and I think, oh my gosh, all I ever did was just worked, grind, and I never enjoyed this life and this human experience that we're living here on this planet. That I don't want to live my life that way, and I'm happy that and I'm proud, honestly, of my mindset to come to this point of, don't let the opportunities go away, because number one, you never know when that opportunity is going to come back and present itself again. And this is another thing my mentor says. He says, just say yes. Literally just say yes. You'll figure out the details later, but just say yes. And that goes more for like when I'm doing like my TV pitches and like talking to producers and wanting to go out there on some stations, but like literally just say yes. Here, quick little story, because one guy in my class, very smart, brilliant guy. Shout out Nadeem. Nadeem owns an IT company and they do very, very well, but he's a star student. He's like a star apple child, and he does everything that our mentor says, and he's totally evolving. He's doing so fabulous. But he was making cold calls to some of these producers to get on their show. The producer calls him back and says, hey, can you come in and do a segment with us via Zoom at 2:00 today? Nadeem goes, oh man, I'm so sorry. I got some meetings here. I got to do this. Hey, what about this time on this day next week? Can I come in and do the segment then via Zoom? First of all, Zoom, you don't have to fly anywhere, right? I mean, do it from your laptop as long as you got Wi-Fi. The producer never called him back. You got to get while you can get it. Just saying. All right. life will change. Let's talk about this. Life is going to change. Nobody's life stays the same. Think about you just even 5 years ago. Think about you just even 10 years ago or 30 years ago. Life is never going to be the same. It's going to continue to evolve. We're going to go up. We're going to have the highs of life. Sometimes we're going to have the lows of life. But that's the cool thing about just, again, going back to mindset. I always think when like things are going really shitty, I'm like, okay, number one, what is God trying to teach me right now? I always think about that question. And then number one, what is God trying to teach me right now? Oh, and then number two, I always say, I can't enjoy the highs of life without the lows. So you just got to go through it, because you're right, if you stay like in that high all the time, it kind of gets stale, kind of gets stagnant, you know? And so that's the fun thing about this life is that, hey, what am I trying to be taught right now? What wisdom can I get from this, and can I carry on into the future? And I can't enjoy the highs of life without the lows, right? So traditional financial plans, okay, let's get into like a money talk. Traditional financial plans assume stable income. They assume linear growth. They assume a predictable future. Okay, like my qualified accounts, 401ks, IRAs, brokerage accounts, like, you know, all of those other traditional vehicles that you could put your money in. But in reality, it's messy, it's unpredictable, and it's emotional. Life isn't linear, so your financial strategy shouldn't be either. And the problem isn't the change, it's the rigid systems that we do have here. Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory, this is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. See, I can even talk about this. My papa right now, so just last Thursday, you know, Mom and my brother got Nanny and Papa from Texas, and they now live in Florida. They live at an assisted living place in Florida, just 5 minutes away from Mom and Dad's house. So it's like the perfect location, even like all inside. The staff is so amazing. You can just really tell that they care. I walked in on Tuesday, and I went and saw Nanny and Papa for a few. And I said, hey, my name's Hannah. I'm here to see my grandma and grandpa. And she goes, okay, what's their names? And I gave them their names, and she goes, oh, they just moved in over the weekend. They were actually here at dinner tonight. I think they're getting pretty settled in, you know? Like, you could just tell that she cares. But Nanny is as happy as a clam, okay? Now, oops, she does have dementia, okay? But she's just being Nanny. She's being her spunky little self. She's doing really good. But Papa, Papa ain't doing too hot. I think Papa's a little depressed. And there's some like deeper stuff going on there with like a helper that he had in Texas. And we can get into that later if I do really want to be so vulnerable and open that up. But I don't know, maybe it's not my story to share. But you know, Papa has been very depressed here. He, you know, you go from a 3-bedroom, 3-bath house. If I had to guess, maybe it was like 4,000 square foot house, you know, to a 1-bedroom apartment. Actually, again, to tie it full circle, you got to get while you can get it. We had a 2-bedroom set up already for Nanny and Papa back in February, but Papa was too damn stubborn. He didn't want to leave. And Papa, first of all, your help ain't even showing up half the time. And then when I was there in the van, I had to take you to the freaking hospital in the emergency room, and then Nanny had to get surgery. It was a whole hot freaking mess. And I'm like, I'm sitting here, I'm like, why am I doing this? I mean, yeah, I need to, and I should because I'm family, but dude, hired help. Get your effing ass up and let's go. Why am I the one volunteering to drive Nanny and Papa to the freaking hospital right now? Anyways, so Papa, he didn't take action when the two bedroom came available to him. So now he's on the waiting list for when the two bedroom comes back open. So literally, this is going to sound so morbid. I'm sorry, but I'm just very blunt. Literally, we're having to wait until the person who's in the two bedroom dies essentially or moves out, and then Papa can go and have his two bedroom because he's just the next one in line, which is good. But I know he's not so happy, but like, what does my mama always say? Mom says, Hannah, make good choices today because the choices that you make today will affect your future. So literally, Papa, the choices that you made back in February, it affected your future. Look at where you're at now. And I don't want to like be so gripey with him. Like I do want to have that compassion. Like honestly, my brother, I talked to my younger brother, Zach, for like an hour last night at like 10 o'clock at night. And he's really feeling emotional for Papa. He's like, but it's such a big change, and I don't know, I feel bad. And I asked Zach, I said, Zach, what do you expect? Do you really think they're going to go back to Texas? He goes, no, they're not safe in Texas. They need to be here. And anytime like Papa brings it up that he's going to go back to Texas, you know, I just feel very bad. And I said, well, that's good. You know, it shows that you have empathy, that you have sympathy for the situation, but you just need to really pivot the conversation and spin it to a positive note. Pop, I hear you, but hey, how about we go to lunch tomorrow? Can I come and pick you up at 12 o'clock? Or maybe we eat lunch here at the facility. Do you want to go fishing? How about I drive you over to the beach and let's go drive on the beach? That's the cool thing about Daytona, right? You can drive on the beach. I don't know if they do that everywhere, but it's the cool thing about Daytona. I'll go drive on the beach with you. Let's just go sit and let's maybe listen to some music and just watch the waves roll in. But seriously, just this week, Papa, get this. He goes, Marilyn, get in your wheelchair. We're going back to Texas. Nanny looks at Papa and says, you know what, George? I think I'm comfortable here. I think I just want to stay here. So then what Papa does is he gets in the elevator, he goes down to the first floor, and he literally walks out of the facility, and the nurses had to run after him and go and catch him because you know what he says? I'm going back home to Texas. And he like, Papa, what? You're gonna walk? You're gonna walk to Texas? Your car ain't even here. You don't got a car here right now. We're gonna get you your car, okay? Honestly, at 91 years old, he is a fabulous driver, but it is scary, like seriously, because he has like, I think it's called neuropathy, if I'm saying that correctly, but like his hip, and he has numbness in his right leg. Bro, you gotta push down the pedal on the freaking, car to drive it. It's like you make me nervous when you don't have feeling in your foot and you're trying to drive a freaking car. But I was with him like a month ago, and he was driving. I was just in the passenger seat because I always volunteer. I said, Papa, let me drive, please, because this is also my life that's in this vehicle right now. But no, he's a great driver, and we're getting him his car. You know, it takes time though, and the adjustments, the changes take time. So I don't know, if you're ever feeling like super insecure, or you just need somebody to like talk to and lean on, this is why family and friends are just so important. Why I really value the relationships that I've created, and only creating like true good connections, right, where it really like fuels your soul. Here's what I've been thinking about and what I've been learning, actually, because y'all, growing up is so weird. Oh my gosh, it's so weird. But I know I'm with the right people when I leave a conversation or a hangout or a sleepover with like one of my girlfriends, and I feel energized, okay? And you actually feel energy and energized once you leave that conversation or hangout sesh, whatever, right? If you don't and you feel more drained after it, I'm telling you right now, they're probably not the right people and good for you in your life. So where the traditional plans break, 401ks and IRAs, locked up money penalties for access, no flexibility. I agree with all of those. And I don't think I want to go so deep into 401ks and IRAs on this episode. If you go to this YouTube channel, the Money Multiplier, and you use the search icon on the channel and you just type in 401k or retirement or something like that, I have a boatload of content on this. So I don't want to totally go into 401k conversation right now. But a question somebody did ask me yesterday, he's a client. Chris goes, hey, I know your opinions. You're not totally opposed to 401ks, IRAs, and all that stuff, but Hannah, what about like Roth accounts? What about Roths? And here's just my short, abbreviated answer. And what I'll do is I'll either get Carson online with me, or maybe even like a Larry Steinhaus, or even like a Stephen Nagy, because Stephen Nagy used to be a financial advisor back in the day, or maybe even Chris Nagel. I haven't done an episode with Nagel in a while, but nobody has shown me how those other vehicles are going to benefit me in my life right now. Now, I get it. There's no one silver bullet. Like, there's a lot of you probably listening that you guys have climbed the corporate ladder. You have been putting money into qualified accounts like a 401k, and your employer matches you. And then, yeah, you'll use that money, you'll roll it over into a self-directed account. Or maybe you take that money and you do a guaranteed annuity stream with it. But me, I never had those types of accounts. So to me, I'm like, why would I put money into this account where I don't have control over it? I'm locking up the access to the capital. And then if I do want to touch that money, I can only use it for specific things. Because why do we have those accounts? Well, we have those accounts because retirement, right? I want to save up this money so that in the future I can live off of this money. This is going to be my income stream during my retirement years. To me, my retirement strategy is my policies. I put money towards my policies. I don't just have it leaving stagnant at the bank. I flow the money through the policies first, and then I go buy myself cash flowing assets or investments, if you will, to produce more cash flow right now. So that then come the time of retirement, I got the cash flow from my investments plus my policy money that I can start taking tax-free withdrawals from, tax-free income during retirement. So I have the cash flow from my investments plus the policy, and then that's what's going to supplement my income during these retirement years. And that's true wealth building. I don't think about it this way too. Do you really think the Rockefeller family, the Rothschilds, the Morgans, the Stanleys, the Barclays, do you really think they're putting money into qualified accounts? Think about it that way. I'm not going to reinvent the wheel. All I'm going to do is I'm just going to mimic and imitate and copy what the elite and the wealthy have been doing all of these years. Why would I try and reinvent the wheel? Just literally copy what successful people are doing. And I'm telling you, you will be just as successful, if not more. And like, I understand, like, I even got this one business owner where he's like, hey, I put money into my 401k, like I do like 25% to the 401k because it saves me on taxes. And I get that. And y'all, I'm still a student of taxes right now. They don't teach you about taxes, I'm going to tell you. And it's hard to find like a good CPA. I finally found one. By the way, just reach out. If you need like a CPA or entity setups like trusts, LLCs, even estate planning, Brent Carlson is my go-to guy, and I can always make that connection between y'all. Phenomenal dude. And I only want to work with people who have the heart for the business, right? Not just trying to like sell a product or like scam people out of stuff, because if you help enough people get what they want, you in return will get what you want. But he's putting money away because then he can minimize his tax liability right now, because he is allocating dollars to a tax deferred account. I would just rather take my tax liability and do something different with it. That's why I'm buying these 2 condos up in Atlantic City, New Jersey right now, because I can take the depreciation, I can take cost segregation, and that's helping my tax liability. Because being a private lender, there ain't no freaking tax things that you can really do. And again, I'm still learning. I'm restructuring like my whole trust system. Like I got the business trust, the family trust, I got my foundation, and I'm making some changes to that because again, you try to go to these people for advice and you think they're gonna be the experts in it, but like then they screw you over because they get greedy. Ugh. I hate people sometimes. This is why I spend a lot of time by myself and with my cats. I'm a little bit of an introvert. I'm realizing as I get older and older. But that's the taxes that I would rather save on and different strategies like that because I'm literally killing two birds with one stone now. I'm wealth building because real estate's always going to go up. Yeah, we're going to have some market shifts, but it always goes up, right? And what I said like last week on the live stream, my dad has said this multiple times. He says the only purchase I never regret the only purchase I ever regret never buying is a piece of land or a piece of real estate because it always goes up. He still talks about this Madeira Beach condo like still to this day. He's like, oh my God, if I would have bought it back then, it was like 250. Today, it's like 450, $500,000. Like, so I'm using it for wealth building. And yeah, do the rentals like cash flow? They kind of cash flow. It's not a whole lot because I am doing like some DSCR loans because remember, all debt's not bad debt, right? So I'm taking out some DSCR loans to finance the rest of the transaction. And I'm going to have to pay that mortgage, right? And so the rents and the tenants can pay the mortgage. And, then I'm going to hire my real estate mentor for the property management side of it. And so like I'll probably positive cash flow like $300 a month. Okay, so not very high margins, if you will, but it's not about the cash flow. It's about the taxes that I can save for myself. And it's also the wealth building aspect that I can keep this property and this land, and then one day in the future maybe I want to sell it, maybe I want to do a 1031 exchange on it. And you never know because again, life just happens. You don't know what you're gonna want. You don't know where your mind is going to be in 5, 10, 15, 35 years from now. You don't know who's going to be around you. That kind of even like I was having a conversation with my dad. He goes, no, I don't want to get into that. Anyways, trusting people. You gotta be careful on the people that you do trust as well. So those are like the qualified accounts. Then you have your savings account, right? Yeah, I could put it into a high yield savings account. It's low growth. It's easily depleted in my opinion, and its debt reliance increases during life transitions. We'll talk about that one here in a second, but let's just talk about savings accounts. Remember my T chart, right? What is the differences between commercial banks and the mutually owned life insurance companies that have been around since the late 1800s? It's the name on the front door. These are both places of where you can store and keep your money at. In my humble opinion, the only difference is the name on the front door. And why, just to do a few bullet points, why I like my policies as my glorified savings account. Still to this day, I look at my policies as it's nothing more than just my glorified savings account. Have that same perspective with your policies. That's all that it is. Number one, I like my policies because actually it does force me to save, okay? A lot of y'all are loosey-goosey with some stuff. Let's just be real, get honest with yourself. But it literally forces me to save, and I get tax-free growth in the policy, or like in a high-yield 4% savings account that's going to be taxable growth. It's protected. Oh my gosh. Policy is a protected asset. If I get sued, have a judgment, a lien against me, no one can come after the money in the policies. And let me tell you something, the higher up your ass gets on that flagpole, the bigger the target it becomes. Just saying. So it's a protected asset. No one can come after that money. Oh, and by the way, it has a death benefit. Oh, because it's not if it happens, it's when it happens. When I graduate, when I pass away, that death benefit money will get paid out to my beneficiaries. My bank account, I don't have a death benefit. But there's one more point I wanted to make there. The tax-free growth versus taxable. Oh, saving my money at the same time I'm spending it. Like, yeah, could I implement the infinite banking concept like using a high yield savings account? Sure. I mean, you could, but the reason I don't and I like the policy better is because there's only one way to get money outside of that savings account. you have to physically withdraw the money out. I guess what you could do is, if you really wanted to, go get a loan from the bank and put your savings account up for collateral with them. But again, the banker's got to be in control of that transaction. Now you're paying them the interest in all those payments, and you got to pay it back on time. But the really only way to get money out of a high yield savings account is to physically withdraw the money out, and then you go pay cash for something, and then now you've accomplished the goal of buying XYZ, but now you no longer have the money. You got to go out there, work for it, earn it somehow to get the money back inside of your pocket, earning you interest again. So that's why I like the policy, because I can literally flow the money through the policy and take out a policy loan, so that I use the insurance company's money in the real world. And that's how my money continues to grow and compound and stay in the policy as if it was never even touched. Now, actually, you may be thinking to yourself, well, Hannah, what's the difference? This is a policy loan with the insurance company. How is that any different than a policy loan with a commercial bank? Bullet points without getting so deep into it. You don't have to pay back the policy loan. Simple interest on our policy loans. And when I do pay that simple interest, this is a mutually owned insurance company. Who shares in the profits of that insurance company at the end of every year? You, me, the policyholders. We receive those profits in a form of a dividend at the end of each year. Is your high yield savings account paying you a dividend? Is that Wells Fargo branch office paying you a dividend every month, every year? Anyways, so that's savings account. That is an option that we do have. Most financial plans work great until life happens. Rigid plans create financial stress. And that's what I don't want to stress. Everyone just needs to chill the F out sometimes. All right, here's my other note. What makes infinite banking different? What makes infinite banking different? You are not locked into rigid contributions forever. You can adjust premiums. You have access to your cash value at any time for whatever you want, and your money continues to grow even when you use it. IBC isn't a product you're stuck in, it's a system you control. So let's just talk like logistics. If you ever do come and do a downtime, right? You can always lower your premium. Depending on policy design, you can lower that premium down by 60 to 90%, aka just paying the base premium for right now. You can lower it down. You can use your cash value in your policy to help pay for premiums if you really need to. And if you really, really ever wanted to, you can even stop paying premiums. You can change the contract to what's called a reduced paid up, stop paying premiums. You still have your cash value bucket. You still get interest. You still get dividends. You still have the death benefit. Yes, the death benefit will reduce because you reduce paid up the contract, but so that you don't totally lose the guaranteed appreciating asset that you built up to this point. You can always RPU those policies too. But like I always say, if I'm a good coach, you will understand that you want to pay premiums as long as you can, for as much as you can, as long as you're disciplined and you have that pay myself first account. Okay, literally go to that episode where I talk about the psychology behind paying yourself first. Please, please, please. I just don't want to get into that foundation right now. But if you have the pay yourself first account, and you treat yourself as your number one asset, you will never, ever, 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 ever worry about premiums coming due. I have never had to stress about a premium coming due because, quoting Brent Kessler, a failure to plan is a plan to fail. You gotta prep and plan for these times. When is my premium coming due? When is that tax bill coming due? When do I have to pay this car insurance bill? When do I got to go buy these airline tickets because my girlfriend is having her wedding in Thailand? You just got to plan for this stuff. But it is life, right? I mean, the whole mojo, or if you will, of this episode is that there are going to be unforeseen circumstances. And again, that's why I like the policies, because I can tap into that money when I want for whatever I want, and I don't have to ask permission from anybody. And once I do request it, I see that cash value hit my bank account anywhere from 3 to 7 business days on a direct deposit. So there is flexibility. And then it has like just different examples, like when income drops, we talked about that. big opportunities, like business, real estate. Maybe let's talk about Walt Disney for a second, right? Disney wanted to start Disneyland, and he went to the bank and said, "Hey, Mr. Banker, I got this great idea. It's called Mickey Mouse and Donald Duck. Would y'all support me? Would you guys give me this loan?" And the banks laughed in Walt's face and said, "Nah, man, we ain't gonna give you these loans." So to finance for Disneyland, he literally had to borrow money from his 2 cash value life insurance policies to go and do it. Now look at the huge empire that Disney is today. Emergencies, right? Always have emergency funds. Quick little side note, what I do, I keep 6 months of overhead expenses. I keep 3 months of my overhead expenses in my checking accounts at the bank. That's money I do not touch. And I also keep 3 months of my expenses inside of my policies. So if something happens, I have 6 months of my expenses covered, and I don't have to worry about emergencies and stuff like that. If my transmission blows and I need 10 grand, I got the money inside the policy, right? So the real benefit is the control. You control when to fund, when to use, and how to repay. So the contrast here is banks control loans, government controls retirement accounts. Your infinite banking system, it's a personal control system, and control is the ultimate form of financial security. I will even add that the ultimate is being the bank. The ultimate is being the bank in my personal life, my business life, and the ultimate is being the bank when it comes to real estate as well. That's why I love private lending. So when life changes, control matters more than just the returns. Oh my gosh. I know this episode's kind of getting to the end of the hour here, but that is the biggest difference. Go and watch that one episode where I talk about how your financial advisor may hate the infinite banking concept and why and what you should know. But a lot of the times when people are coming and talking to you about your money, they're talking to you about the money that you're already saving. And they're trying to get you higher rates of return with the dollars that you're saving. But in order to do that, that involves more risk. I'm never going to talk to you about getting higher rates of return. I'm going to talk to you about the money that you're already spending. The money you're already spending on your cars, on your housing, your living, your lifestyle, your vacations. How can I keep the money that I'm already spending and recycle and recapture that money back to myself so I don't lose it forever and ever? Uninterrupted compound interest. Cue Albert Einstein. Compound interest is the 8th wonder of the world. Those who understand it earn it, and those who don't pay it. So it's just a big mindset shift. So people fear commitment because they've been burned by people, by systems, by the market. I get that, and I have compassion for that. And this concept requires long-term thinking. But it also allows for short-term flexibility if you ever needed to. Commitment doesn't mean restriction, it just means structure. Now you're being disciplined, you're creating structure. Just like how you have structure to go to the gym 3 to 5 times a week, have the same discipline and structure for yourself and your money in your own banking business. And let's be real, you're not going to be locking up your money, you're just positioning it better. Remember, it's not a payment. Yes, technically, it's a premium payment, but you got to think about this as a deposit, a premium deposit, because when I put money into an account that I own, I control, and I have immediate, my definition of immediately is within 30 days, and I have immediate access to this cash value or this capital to take out and use, is it treated more as a payment or a deposit? I think it's a deposit. What word do y'all like better? So just kind of addressing some common objections and questions. What if I can't pay premiums? We talked about that. Policies can be designed with flexibility. You can always lower the premiums down or even stop paying premium using the cash value to pay for premium. What if I need my money? Oh shit, that's the whole point of why we do that. Why we do this. It's accessible. You can use your money for whatever you want. And what if my goals change? Well, the system works regardless of your goals. You don't want to start up that veterinary clinic anymore. You've realized, this ain't my passion. Or Hannah, you don't want to pursue being a CPA anymore and you drop out of college. That's not my passion. It's okay, because your cash can be used for literally anything. So instead of thinking, what if my life changes? You need to ask yourself, do I have a system that works no matter what happens? No matter what wars are going on in the world, no matter what the market decides to do, no matter what inflation is doing right now, what taxes are doing, the price of gold and silver, it doesn't matter, because this is the true freedom and ultimate control, because it's contractual guaranteed interest. So I think that's really all my thoughts, but I do have some closing lines I kind of want to get into. The goal isn't to protect your life, it's to prepare for it. Life is going to change, and your system of where you're storing your money should be able to handle it. The infinite banking concept doesn't remove the uncertainty of life. This is just life, y'all. But it gives you control inside of it.
Well,
And you don't need a perfect plan, okay? Everyone tries to say, oh, I need this perfect policy design and this perfect plan that's gonna suffice all of my financing throughout my life. No. Go back to Nelson's book. It's not just one policy. It's about creating a system of policies that are all working together. You're going to start more policies. You're going to put policies on other people in your family, your spouse, your children, your grandchildren, your business partners. You're going to continue to grow and start more policies. It's like saying, hey, does Bank of America have one branch office, or do they have multiple branch offices of their bank? They have multiple branch offices of their bank, and you are going to have the same branch offices of your bank. But don't put the cart in front of the horse. You're going to know when you're ready to start additional policies. But last little story I want to share with y'all, and just how this has impacted my life, because like when I was living at the old house in Pelican Bay, I learned Pelican Bay is actually a prison, but no, it's not. I was not living at the prison. It's actually a neighborhood called Pelican Bay. But I was living there. I want to say this happened like 2021 or 2022. But there was a week where my refrigerator and my microwave went out in the same week. And so I had to use my funds, because I wasn't making the money I'm making today, you know? I was still like a W-2 person working on the application team, I think, back then. So yeah, no, it had to have been like 2020 then. It had to have been like 2020, because 2021 is when I started to speak on stages. Anyways, so my microwave and my refrigerator went out in the same week. And I was paying myself back because I bought this new MacBook computer, and Dad always teaches us, pay yourself back, charge yourself interest, be disciplined with it. So I was paying myself back for the MacBook computer. And because my appliances went out and I had to go spend money to buy myself a new fridge and a new microwave, I just couldn't pay myself back that month. But remember, I'm in control of this transaction. It's okay. Hannah's not going to call Hannah up on the phone and say, hey girl, you're missing a payment this month. I'm going to come and seize that MacBook computer from you because that's what you have as collateral with me. No, they ain't going to do it, right? You are in total ultimate control here. So again, thank you y'all for being here, for tuning in. Actually, I do feel a lot better. I think I needed to like get out of my house and like get some is it vitamin C or vitamin D? Damn it, I'm stupid. From the sun on my body. So I'm feeling a lot better. I wish the ocean was warmer right now, but it's not warm yet. I don't know, maybe it is. When I was here, not last weekend, the weekend before, so like 2 weeks ago, my friend, she put on a little show on the beach. She brought her decks out, her little DJ decks, and she put on a little show, and all of our friends came. We were over in New Smyrna Beach. That was so much fun. But yeah, it was cold. I did get in. I got in to the beach or to the ocean, but I was like, I can't stay in here for long. I only went like up to here. I was like, ain't gonna cross up here right now. So I will be back next week, next Tuesday, with another podcast episode. Come and join me every Thursday, 9 a.m. Eastern time, where I go live. You can ask me the questions in the chat box. You can see the live stream here on this channel, on my Hannah Kessler YouTube, my Instagram account, my LinkedIn, and also my Facebook pages, Money Multiplier and Hannah Kessler. and let me know what topics that y'all are wanting, or conversations you want me to get into, or maybe you have like a guest you want me to bring on. I'm going to continue to be vulnerable. I'm going to continue to be honest with you about what's going on in my life, what I've been learning, because you can never hit the arrival syndrome. You got to always continue to shape, evolve. Oh my gosh, hold on. Let's end it on this quote. I saw this quote on Facebook. I reposted it. This was like 2 months ago that I reposted it. And I was like, oh, this quote just like speaks to my soul. Stand by. It says, I'm increasingly convinced that the willingness to change your mind is the ultimate sign of intelligence. The most impressive people I know change their minds often in response to new information. It's like a software update. The goal isn't to be right, it's to find the truth. And that's what I genuinely believe that, Dad, my family, the Money Multiplier team, and Money Mentors, we're doing, is just exposing the truth and taking back the control of our money, thus taking back the control of our time, thus taking back the control of the freedom that we have over our lives. So until next week, don't forget to hit the subscribe button. Please like this video. Okay, come and support me. Please like the video. But until next week, I will catch y'all then. Do well, be good, think for yourself, and question, my friends. Catch you then. Mwah. Bye, everyone.
Hey y'all, if you've made it this far, this is where most people stop, and that's why they continue to be stuck with their money. Continue on with your education. Click right here. It'll take you to the next video.